Hello everybody, welcome to this market report. My name is Christian Charlo. Today we're Friday, April 10, 2015. Today folks, I want to make a follow-up on the last market report when I talked about the energy stocks that were rallying. Today, the energy sector remains a sector that's active, but right now we have what's called the beginning of a stabilization phase. So what was important in the energy sector though is to actually take some profit on the positions that you bought on April 2nd when I make the market report. So if we take a look at the energy sector here, on April 2nd, first of all, oil was starting a rally. Right now, oil is stabilizing, staying within this clear upward corridor. Concerning the energy sector in the TSX on April 2nd, what we did recommend on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below, we did recommend a bullish ETF to track the rally on the energy sector. And that bullish ETF was HEU. On April 2nd, we recommended that ETF. And since then, we have been able to take 2 rounds of profit. If you bought that ETF to trade a rally in the energy sector, you have to take some profit on that ETF. Why? Because the ETF right now is reaching a resistance and it's beginning a stabilization phase, just like the energy sector on the Canadian side. And it's important to do so because overall the fundamentals of the energy sector though have not changed that much. We cannot say that demand has surged by so much that will allow energy stocks to pursue their rally with so much strength. So this is why when the rally started on April 2nd, whenever you can take some profit on some positions, do it. If you can't take some profit because your stocks have not surged by 5 or 6%, okay, you hold on to your positions, but make sure that you at least can take some profit, even if you're not making a 5% or make 3 or 4%, take some profit on some of those positions. And those positions I'm talking about are some positions not like ERX, which is an ETF that you have been able to take some profit. It's an ETF that we also recommended on marketgurus.tv to track the bullish cycle of the energy sector in the US. But there are some positions, for instance, like Torque Oil and Gas, since it broke out on April 2nd when I've showed it to you on the market report, well, the stock has not surged by that much, but if you were able to take some profit on April 8th at 11.27, good job. If you have not been able to do so, well, you continue to hold on to that stock, but 9.69 is going to be the point where you're going to have to get out. Or you could say, you know what, even if it has not reached 11.25, let me slightly take some profit on a stock like that, even if I'm making only a 2 to 3%. Another stock that did perform well as well is Anadarko Petroleum. Since April 2nd, we have not made the 10%, neither the 5%, but that's also a stock where you could say, why not take some profit around 2 to 3%. MEG as well, since it broke out on April 2nd, still maintained its upward trend. So most of those stocks I've shown you are all maintaining the upward trend, and they're in a situation where you can either take some profit at a shorter level, which means not at 5%, but at 2 to 3%, or you could say, I'm going to hold on to them slightly. Another stock like Canadian Natural Resources, since April 2nd, the stock has kept its rally. Right now, it's forming a new sideways formation. And what's going to be interesting to watch is to see what's going to happen with the new cycle of the energy sector. If the energy sector on the Canadian side can go above, can break that former resistance at 235, that will be a new go on those stocks like MEG Energy or Canadian Natural Resources, which are right now forming a sideways formation. So the new entry point in Canadian Natural Resources will be higher than $42. On ETP, I've shown you that stock on April 2nd. It's the only stock that didn't perform well. The stock stays neutral, didn't perform. So that's the only one that didn't perform well. And elsewhere, there's ATH, which was still neutral. If you bought it on April 2nd, good job. Now you're definitely in a situation where you can take some profit on a stock like that. So that's actually a stock where you can actually take some profit. And HES, so far that stock surged on April 6th, but since then it's stabilizing. So if you bought it, you should continue to hold on to it as long as it remains within that upward trend. So which means as long as it stays above $70.15, you hold on to that positions. So if we take a look, folks, overall, most of the positions in the energy sector have performed well. On marketgurus.tv that you can have access for free for 10 days, what we favor to trade this bullish cycle is bullish ETF, such as HEU on the TSX or ERX on New York. On those bullish ETF, we have been able to take some profit on those positions. But if you bought some stocks, as I've shown you here, most of those stocks are maintaining the rally. We're not in a situation, some of them have not made 5%, but if you've made 2 to 3%, you're definitely in a situation where you could slightly take some profit on those positions because the energy sector is forming a neutral formation, and because the fundamental factors have not changed for the energy sector, well, there's still a risk that this neutral formation could lead to a bearish cycle, or it could not. But it's important right now to put some money in your pocket with the positions that have performed well since April 2nd. So that said, see you next week on your market report on marketgurus.tv.